Ladies and gentlemen, welcome back to the channel. I am excited for this one because we are talking about potentially the most underrated, underappreciated, undervalued AI stock right now that is about to explode, in my opinion, on October 1st. Now, the stock is down about 2% today. I want to go over why this is. Okay, what's happening with the stock, why I'm so excited, my position in this company, and what is coming on October 1st. This company is Rezolve AI. Now, I know I've talked a lot about this, but I think the stock is at the precipice of making a huge move to the upside. There's also another thing I want to do in the options market before they report earnings, really any time now. I might do it today, in fact. I'm going to share that with you a little bit in today's episode. If you guys want to come join the trading community, get access to stocks like Rezolve and the work that we are doing over there to identify and invest in under-the-radar AI stocks before Wall Street knows about them, come check it out. Link down below in the description of this video. I did buy another under-the-radar AI stock today with a brand new position. So again, not financial advice. I'm not a financial advisor. Don't be a jackass, okay? The portfolio is up 185.3% year to date. I believe we're outperforming all hedge funds and institutions this year. Performance can vary, it can change. You have to understand the companies you're investing in. Again, don't be a jackass, but if you want to come join, link down below in the description of today's episode. In today's episode, we are also going to be going over your broader market news today. Specifically, there's one thing that Trump said today, and there's a specific date that you need to be mindful of, and that is Sunday. Trump is going to be going on Fox News to do an interview. I think we could get some big news to start next week's trading week, and we'll discuss that here in today's video. But first, let's talk about Rezolve, okay? I'm going to assume that you have a pretty good understanding of Rezolve, okay? If you've been a viewer of this channel, you definitely know about this company. I've been talking about it since it was less than $3 a share. Today, it's $6.76 per share. But essentially, the company spent 9 years developing their product. They've started selling to consumers or companies earlier this year. Okay, the company went public via a SPAC. So Wall Street stayed away from the company up until recently. When I started buying Rezolve in the $3 range, only 5% of shares were owned by institutions. Today, Rezolve has announced that that number is about 10% ownership from institutions. One of the most beautiful things about this company, though, is 40% of the shares, roughly, are owned by insiders in the company. So there's almost like a restricted float. We've talked about this before on the channel, but Rezolve isn't even like a popular retail AI stock at this point. Rezolve, you know, this day it went up 21.5%. It had 29 million shares worth of volume with an average stock price, call it $5 and some change. That's only like $150 million worth of volume. Any other high-flying AI stocks or well-known AI stock is doing multiple billion dollars worth of volume, okay? What you do is you times the volume by the average share price of that day, and you find that dollar amount. On October 1st, I think everything's going to change, okay? Rezolve is going to become a very well-known AI stock in retail investors' portfolios. We've seen ever since August 17th, where the company essentially completed its de-SPAC process, which lasted a year. Long story short, Wall Street has started buying the company in the last month or so, okay? And they've rapidly grown their position in the company. 14% of shares are also owned by private companies. So again, anywhere between 75 to 85% of the float is not really being traded right now. And just insiders alone own a significant portion. So as buying pressure comes in, this is not a company that is going to go up 10 or 20% with a large increase in buyers. This company could go up hundreds of percents if you really get an influx of buyers, because there's not a lot of shares and people are going to be fighting over a limited quantity of shares. It's kind of like GME, if you will, where everyone just bought and held the stock. Well, people have bought and held Rezolve. Okay. So yeah, that's going to be big. But essentially, on October 1st, the company's going to raise guidance, okay? The company set out this year with an ARR target, annual recurring revenue, if you're unfamiliar of that term, of 90 million. They came out mid-year and said they have already exceeded over 70 million in ARR, that they are going to exceed over 100 million in ARR by the end of this year. So anywhere from 150 to 300 million in ARR is the target. We've heard multiple times from the CEO that growth is accelerating. We've heard the CEO even say in recent days that he believes a massive re-rating is coming for the stock next year. And I think that has to do with guidance. Again, I think we're going to get a really good guidance number October 1st, probably in the 200 million range. That's big. That's doubling the company's guidance, right? That's massive. But I think that guidance, we might get October 1st for 2026, probably in the first quarter of next year is when you're going to get like $1 billion ARR guidance, okay? That's where things really change for the company. That's where the stock could be $50 to $100 per share next year, okay? Could be a 10x or more, okay? That's why I'm kind of pounding the table on this one. Not that you should buy it, but it's worth looking into. Okay, so that's the big catalyst coming October 1st. It is the guidance raise. Now, recently the stock has started to do very well. Again, with so much of the float being locked up, just an incremental increase in buying pressure has taken the stock from $3 per share to a high of $8.45 per share. It's off of those highs, okay? It's back down to $6.73. What is happening with the stock is simple. It hit 91 on the RSI. The relative strength was out of this world, okay? It was way too high. The stock has come back down with an RSI of like 71 today. You are now in a beautiful place for Rezolve's earnings. You did not want to head into the earnings with an RSI of 91, because now Rezolve could hit $10 a share and probably have an RSI of like 80, maybe like 81 or 82. You could see the stock get into the 20s, I believe, before the RSI was back in the 90s, before you'd need to see another kind of chill period. I talked about this for a while on the channel, that you were very much likely going to get a consolidation of the recent move before earnings. Now, I think the couple of days right before October 1st, you could see another leg higher in the stock right before earnings. But I actually think this is a very healthy thing to see. This is what I've wanted to see for a while now. And it does present an opportunity that I am looking at in the options market. But before we get into that, Rezolve has some big news recently that you should be caught up to speed on if you don't know this. But on September 11th, about a week ago, Rezolve AI launched visual search. And I think this is going to be a big seller to get more partnerships, even with a company like Amazon or a company like Walmart, right? To integrate visual search is big. Imagine if you could go to Amazon Prime, click on a camera button, take a picture of an item, and then have a bunch of similar items or that exact item pop up to let people buy it. Imagine that. That's big, okay? I think this is going to be a huge seller for companies. Now, on the 16th, 3 days ago, the company hired former head of Microsoft's retail and consumer goods, Crispin Lowery. He did direct hands-on work with multiple high-level brands, including Nike. Okay, he was appointed the executive vice president of growth. Okay, and he will lead Rezolve's global expansion and adoption of its brain commerce platform. Nike is one company that I've talked about quite a few times on this channel that I think Rezolve is going to partner with. They might have already partnered with Nike, and we might hear something on earnings, on October 1st. I'm speculating there. Okay. I have also speculated that I think NVIDIA, just personally, like a wild speculation, that NVIDIA is going to purchase the stock. I think NVIDIA is probably going to invest in Rezolve. It's in their their ballpark, and it just seems to fit what NVIDIA has been doing, like in their 13F filings. I also thought the same of Nebius. I thought NVIDIA was going to take a stake in Nebius back in April when I went all in on that company. They did, okay? So, again, it's not like a guarantee, but I do think Rezolve could be a target by NVIDIA, and then them taking a stake. And whether it's a blowout guidance on October 1st, which I see as very likely, or someone like NVIDIA taking a stake in the company, or both, is really going to put the company on the map in retail investors' eyes. And again, with the structure of the float, it's going to mean some pretty dramatic upside for the stock. I think the stock's going to be anywhere from $20 to $30 by the end of this year, but I am forecasting a very strong end of the year broad market rally, October, November, December. The stock could be even higher than $30 per share. Again, depends what the guidance we get on October 1st. If we hear about 2026, I think the company's going to set guidance for $1 billion in ARR by the end of 2026. If we hear anything about $1 billion in ARR by the end of next year on October 1st, yeah, it's over with. It's off to the races. Now, again, this is not a recommendation. It's not financial advice, obviously. You could lose all your money, especially when you're trading options. And to be honest, I really don't like the options on Rezolve, but I do like the setup that we are seeing with the stock falling from those $8, 40 some cent highs just a couple of days ago down into the $6 range. I think there is an opportunity in the options market before their earnings on October 1st. Specifically, I'm looking on potentially buying like 10, 20, 30, 40, 50 of these options. And once we do get that rally into earnings, which I think is going to happen, to make them free and hold some free options into the earnings. Now, I may or may not do this because I do have a very large position in the stock already. So it's not going to move the needle unless I did something big. Again, if you guys want to see any moves that I make, check the link out down below in the description of this video. And I do have some options already as well. But current market value in this portfolio is $87,000. Okay. Total returns, $50,420, up 138%. Average cost, $2.82. 13,000 shares are currently held in this portfolio. In the options, current value about $6,400, up 305%, or up $4,800. I have 15 of these Rezolve 250 calls for 2026. And again, as I've said before, I really don't like the options because it's kind of dollar for dollar, right? Right now, it costs $669 to buy 100 shares. To get one of these options, it's $425. So yeah, like it's almost the same amount to just buy 100 shares versus buy an option that gives you control of 100 shares. So it's like, you might as well buy the stock at that point if you're interested in the company anyways. In this portfolio, I currently own $73,590 worth. Unrealized return, $43,942, up 139.61%. Invested in this company for 91 days. Current quantity, 11,000 shares. Average cost basis, $2.80. I bought a lot in the $2.50 range. I bought some in the $3 range. So that's where you're going to get that average cost basis. Okay. So that's 11,000 shares here plus 13,000 shares in the other brokerage. And then you have 1,500 shares. Basically, the options are working like dollar for dollar with the stock. So that's 25,500 shares. Plus, I have 1,000 shares in Webull and 1,300 shares in Thinkorswim. That is 27,800 shares total, times, again, where the stock is currently at, about $6.70. $186,260 in total exposure in the company, not including, what was invested in the company, not taking out the cost basis. But that's currently what I have allocated to the stock in total. So again, I'm not a financial advisor. I'm not a financial planner. I have very much skin in the game here. If I'm wrong, I'm going to lose a lot of money. If you decide to invest in this company and the thesis is wrong, you're going to lose a lot of money. Okay. You have to understand that risk. Okay. Now, from a technical perspective, I think we could fall as low as $6.50 or so. We've seen a lot of support yesterday when we hit a low of the day at $6.56. I think a lot of buying pressure likely comes in around $6.50. Now, if we were to fall below $6.50, then that's when kind of Pandora's box gets opened up a bit. You could fall at that point. Another level of support's likely around $6.30, and then another level of support's likely around $5.60 per share. I don't foresee a large decline before earnings. I look at what we're seeing now as just a reset to some of the, egregious momentum that we've seen recently, right? Not that, the company's falling out of bed or something like that. That's not what we have here. But when you get a stock that essentially doubles, right before a big catalyst or into seasonal weakness like we are right now, and an RSI was at 91, you should always expect that you're going to see a consolidation phase. And that's all I think this is as of right now, just to be clear. Okay. And we also have a day like today where the IWM is down 0.86%, NASDAQ up 0.5%, S&P is doing its thing as well, up 0.34%, but small caps getting a little bit of a sell down today, which obviously is going to have an outsized effect on a company like Rezolve. In broader market news today, Estonia's prime minister says Estonia has decided to request NATO Article 4 consultations over Russian jets entering its airspace. Now, a stopgap spending bill to avert a government shutdown falls short in the U.S. Senate today. Betting markets like Kalshi are assigning a 56% chance of a government shutdown, which will start on October 1st if there is not a raise to the debt ceiling to get the government funded. Okay, here's the deal. Government shutdowns normally are not negative for stocks. Normally stocks do just fine. It's less spending, right? You could see why stocks really wouldn't care. Okay, but it does mean like the military wouldn't be paid, postal workers wouldn't be paid, certain other areas like parks would be shut down, national parks, and when the economy is, or Wall Street views the economy as on shaky footing, a government shutdown is not a great thing. Now, as we get closer to October 1st, we're going to be in the final days of seasonal weakness for September, and you could see a government shutdown starting to add a little bit more uncertainty to markets, which could be a catalyst for a shorter term sell-off. But at this point, there's still, a week and a half left to get something done. So stocks aren't going to preemptively, freak out over that. Senate Republican leader Thune says the Senate will take another vote on the House passed stopgap funding bill at some point, but not today. 13 counterparties take $11.363 billion at the Fed reverse repo operation. This is something we've talked about for a while now, but as this money really winds down, you're going to see the Fed that has to stop running off their balance sheet, okay? This reverse repo operation is really excess money in the banking system. So how it works is if you're a bank, you can't sit on, call it $100 billion of cash. You just can't do that. Now, if you're a bank, you can do two things with customer deposits. You can give loans and you can buy treasuries. Okay, that's the only two things. You can't go out and buy stocks with people's savings money. Okay, you just can't do that. It's illegal. Okay, so you can do two things: lend money and buy treasuries. Well, these are treasuries. Now, the reason the bank cannot hold $100 billion, let's say, is because inflation, okay, is, always around, right? So if you have $100 billion of money sitting there and inflation is 0.0, let's call it 2% a year, or let's use 3% a year because that's more like logical for these days. That's $3 billion you're going to lose in purchasing power. Divide that by 365 days. That means every day that money would lose at least, 8.3 million every day if you just let that money sit there. So the Fed sets up the reverse repo operation, or they did a long time ago. So banks can park their money there, get a small fee, basically pay for the deposit sitting there. Okay, so banks don't have to rush and give out all these crazy loans and blah, blah, blah. Hopefully you understand this. Well, if the banking system starts to run low on money, this becomes a real issue, right? As the Fed is trying to sell these assets off their balance sheet to banks, if banks start to not eat up that extra money, which this is the lowest reverse repo operation number we've seen in years, that starts to, weigh on the Fed. They have to stop running off their balance sheet. So we're going to watch this because honestly, at the next Fed meeting, you're probably going to see the Fed winding down their balance sheet operations or slowing them down quite a bit, which is historically even more positive for stocks than even rate cuts. German foreign minister says, by intercepting Russian planes immediately, we are showing NATO is always ready to defend itself. The Trump administration considers raising the retirement age to save Social Security from insolvency, per Fox. I mean, guys, that is why you do what you do. See, you don't have to rely on, Social Security, right? You're inevitably going to be able to retire far younger than these Social Security, requirements. And for that, I give you a nod, man. You are doing the right thing at the right time. If your family doesn't appreciate that, well, let me just tell you, they're proud of you, or they will be at some point. And I know just those words alone can mean a lot to some people. ByteDance to allow TikTok to continue serving U.S. users. Iran's UN envoy, after a UN vote, says the door to diplomacy is not closed. India's Trade Minister Goyal likely to visit the U.S. soon for trade talks. Donald Trump wrote on X, True Social, he says, I just completed a very productive call with President Xi of China. We made progress on many very important issues, including trade. Wow, that's huge. Fentanyl, the need to bring the war between Russia and Ukraine to an end, and the approval of the TikTok deal. I also agreed with President Xi that we would meet at the APEC summit in South Korea, that I would go to China in the early part of next year, and that President Xi would likewise come to the United States at an appropriate time. The call was a very good one. We will be speaking again by phone, appreciate the TikTok approval, and both look forward to meeting at APEC. Wow, that is not just good for stocks, but that is good for the world, to have a cordial relationship with China. It also really promotes healthy AI competition. We are in an AI race with China, okay? From a military front, from a healthcare front, from a technology front, from a device perspective, a chips perspective. The Cold War with China propelled technologies decades ahead of where they would have been, right? Without the Cold War with Russia, we wouldn't have what we have today. It forced aggressive innovation and competition. And this, AI race with China, as long as there's not a military aspect to it, will be for at least the next decade or two a big positive for both countries, right? For China and the US, for the development of civilization. So to see them really get along, not to mention trade, fentanyl, some of these things here is really good. I do think at some point the fentanyl tariffs will be dropped on China. I think with a potential TikTok deal, some of the tariff rates are likely to come down. And I think that is an upside catalyst for the next couple of months. What do you think happens when Trump comes out and says they're dropping the fentanyl tariff? That tariffs are going to fall 20% on China. It's going to be a very positive catalyst for stocks. Fed Moran, the recently confirmed Fed appointee that Trump appointed, says, I'm clearly in the minority in not being concerned about inflation from tariffs. Fed Moran says getting to the neutral rate half point at a time is reasonable. He says, I don't think a 50 basis point cut would worry markets too much. It's a measured a measured pace. And Fed Moran says the longer we stay restrictive, the greater the risks to the job market. Trump will appear for an interview on Fox News on Sunday, which, you know, I wouldn't be surprised if there's some kind of news from this call between Trump and Xi actually shared with us. That'd be a good way to start next week's trading week. And Moran says, I think growth will be better in the second half of this year, in which Atlanta Fed GDP Now tracker is at 3.3% for Q3 GDP. This could obviously change, right? But some of the big data sets that really tell you a lot about the economy. You could see, well, it's not here anymore, okay? But private domestic investment growth and personal consumption expenditures growth is very positive. I don't know why it's not coming up right now. But very healthy levels of investment currently taking place. Maybe I can find it. Doesn't really matter. I've talked about it recently on this channel. You're positive like 6+% for real domestic investment growth, and you're positive over 2% for real consumer expenditures growth, which shows economy's really doing fine. Now, again, just to reference the point I made earlier, you have so many bears right now on markets. It's going to be hard to get a seasonal correction or sell-off in September. Bullish investors sit at 41.7%, neutral investors at 16%, and bearish investors at 42.4%. So really neutral is just falling. Bullish investors did rise a lot from last week, and bearish investors fell a little bit, but you are still like 11%, a little bit 11.5% higher than the historical average for bears. So like there's a lot of bears out there. Bulls have recently grown, but when you have this many bears in markets, even at new all-time highs, it's very hard to get that correction, okay? Now, the CNN Fear and Greed Index as of today is coming in at a whopping 62. You're not even halfway through greed, okay? Market momentum is greed, stock price strength, extreme greed, stock price breadth is neutral, put and call options, extreme greed, market volatility is neutral, safe haven demand is neutral, and junk bond demand is currently in fear. And if we take a look at the percent of stocks trading above their 50-day moving average, holding pretty steady as of recently at 63.2%, down about 2.5% today. But if the midpoint is about 50 to 55, like that's an average over the last 5 years or so, you're a little bit on the higher side. So markets internally look healthy. Tesla stock at the time of recording this video is at about $425 per share, up 1.94%. Ladies and gentlemen, let me know your thoughts on this down below in the comment section. Hit the like button and subscribe to the channel if you have not done so already. Have a great rest of your day. Have a great weekend. And I will see you in the next one.